All right, everybody. Thank you for joining us. I am here today with Jerrid Anderson. Jerrid is a broker in our Kidder Mathews Seattle office. He runs an impressive multifamily team, to say the least. They're one of the leaders in the area. And Jerrid and I have got to know each other through working at Kidder Mathews together, and figured out pretty quickly that we share a lot in common, not only with how we go about our brokerage businesses, but what we do on the back end, particularly related to investing in commercial real estate, which a lot of people are interested in. It's a little bit of a mystery to a lot. So our goal here today was we thought we would talk about what we could do to kind of open the doors on showing what getting into your first commercial real estate investment looks like. How do you continue to invest? What are some best practices and mistakes that we made along the way? Because I can promise you there's plenty out there. So Jerrid, thanks for joining me. Maybe I'll start with kind of maybe a background on how you got into this business, just from a basic brokerage standpoint. But then at what point in your brokerage career did you decide you wanted to invest? When did you start looking, and kind of how did that steamroll from not only wearing your broker hat, but broker investor?
Yeah, appreciate the opportunity to be featured here. And my story is, I'd say, interesting in that it was uninteresting. I grew up in Vancouver, Washington. My family had flipped homes before there was much TV shows about doing it, and probably did, I think they had said, close to 100 home flips. Some of those were apartments. And so when I went to school at Washington State, my plan was to go home and flip homes with my dad. Thought I'd be able to buy my own. You could buy homes in Vancouver, really cheap, crappy ones for around 10 grand, and get going from there. While I was at school, my parents moved across the state to Spokane. I had no desire to live there, so I kept coming back to Seattle with friends each summer. I don't know if you've been in Seattle for the summer, but easy to fall in love with. And so I just told myself, you know what, I'll go do it there. So came to Seattle, zero market research. This is before I had a smartphone, so I couldn't flip open the app. Had my 10 grand. Houses cost 400. Didn't add up. So actually the investing is what got me to the brokerage. I had to go circuitously through brokerage. So I actually got my license and started selling homes, townhomes, condominiums in the residential side in 2013. And about 12 months into that, one, I found I had a little bit of skill there. And two, I learned about this thing called commercial brokerage. Literally did not know that it existed. So someone said you should talk to this firm, which was at the time Colliers. Talked to a bunch of brokers, office, industrial, multifamily. And multifamily hit home because of my background with my family. I wanted to own apartments and homes. So got into that brokerage thinking, okay, once I grow up, I'll be an investor. And that career took off. So now running a team of 11 people. My focus is in Seattle, selling apartment buildings and development land for apartment buildings. And I have a team that covers the state of Washington. So that's a background on brokerage and what led me to the investing side.
Okay. How much were the 10,000? What would the $10,000 house in Vancouver be going for today? Naturally, I'm curious.
Oh, wow. That's a great question.
I can't even fathom buying a residential home for $10,000.
I guess I should qualify that. You needed 10,000 down.
10,000 down. Okay.
It'd be a $50,000 house, and they're probably well over $500,000. But what that would get you at the time, what was a $50,000 house? It was usually a really functionally obsolete 2-bedroom, 1-bath that someone probably passed away in and was full of garbage and stunk. So it wasn't like you're buying anything on Queen Anne Hill. And so we come in and we just tear out a wall, build a 3rd bedroom, build a 2nd bathroom. That was kind of keep it really simple, just make it more livable, and then sell it. There's no fancy, period correct architecture or anything of that nature. Just build a couple walls, add a bathroom, move on.
Yep. Makes sense. Okay. So let's fast forward. Remind me, how many years into brokerage are you now?
10. So Dylan, my partner, and I had our 10-year anniversary 3 weeks ago.
Okay. And at what point in your brokerage career did you buy your first deal?
Bought my first deal. Interestingly enough, I had 2 deals that failed. So I went to purchase them. And because the way we make money in brokerage, and this is kind of back to the investing hat, they didn't like my income. Right. So they were like places.
And when you say they, you mean the banks when you were going to get
the
financing,
banks. Right? Yeah. I wanted to like house hack and turn this, 1 house into 2 units or 2 units into 3, whatever it was. And they looked at what I'd made. And even though I'd made pretty good amount of money in one of the last 3 years. It was just one. They want to see it for 3 years. So my first two were failures to launch, and I bought my first property in 2017, and that was a triplex in the top of Queen Anne. And so I house hacked that, and so much as added what was at the time just a vacant basement space, added washer and dryer, what I call a master suite, so a large bedroom with a walk-in closet, not walk-in closet, closet and bathroom. Long story short, made it very livable and ended up living in that for a couple of years as we raised rents and improved the other two units already existing in the property.
You still own it, or did you sell it?
We sold it, yeah. There just came a time when we wanted to buy a single family house, and it was either really make the bank account skinny or sell this, take the money we'd made and move it right into this house. So for little to nothing down out of pocket, we were able to buy a home that's been great for our family in Magnolia.
Yeah. Awesome. Well, you'd probably agree with me here. There seems to be, when you look at real estate investors, there's kind of two camps. There's the buy and hold forever, or buy, fix, flip, and just turn and burn and keep doing that. And in my experience, there isn't a lot of crossover, and both those sides seem to feel pretty strongly about whatever side that they're hanging out on. It sounds like you have kind of met in the middle, in that you've bought some properties, you've sold some properties, you have some long-term holds. What's your kind of general? I mean, obviously knowing that you've done both. I mean, what do you think about the two sides of the spectrum? What has you, I guess, more subscribed to the idea of, I'll hold some, but I'll sell others?
I think at this age, for me, I'm not looking to harvest any gains. So if I can keep a property and refinance it, or sell a property and buy something bigger, that's really my mode of operation. There's definitely nothing we've bought, and lessons learned we can talk about later, but nothing I'm in love with. So you give me the right price, I know the market, I'm happy to sell. So example of that, my next property I purchased was a 12-unit property in Spokane. Worked the business plan well on it, caught some really good market timing for rent growth, and an offer showed up that I felt, because I'm active in the market, was really aggressive, maybe better than we'd get on the market, and accepted it, and then sold that and bought two more properties. So turned that 12-unit into 33, 22, like 55 units plus commercial.
Yeah,
and
fantastic.
Yeah, I had to bring in some partners, so it wasn't just a straight over, but I was happy to sell and go on to a bigger opportunity. So
yeah, well,
camp wise, I'm probably not in this like long-term hold camp yet. However, I see why you get there, and it's when you're buying great real estate. And the problem with great real estate for me today is I don't get much of a return. So I'm trying to replace my living expenses with investing income. And if I'm buying these long-term hold, it's going to take me a long time to see that appreciation. So eventually I would like to be there, but for growth, I'm probably more of a seller at the right price. And then once I get to the preservation stage, I'm probably buying some pretty sweet buildings and holding on to them for a very long time.
Yeah, well, and you touched on it. I mean, when you're buying the really nice real estate, the competition is usually a lot higher, so that's driving your returns down.
Yep.
Barrier to entry is higher, usually larger deals, right? And obviously how to syndicate a deal and put an investment group together, but it's just a different story than like, for example, what I've bought has been more very definition value add type real estate. I'll go down and dirty because we've helped our clients fix those properties, so we know how to do it ourselves. But one thing you touched on that's interesting that I don't think a lot of people know is that as brokers, we're 1099, and it's amazing. I shouldn't say it's amazing, but it's just always been interesting to me that you go to the bank and you could take a 1099 earner that probably makes double or triple what a W-2 earner makes, and they will favor and lend better to the W-2 earner because they feel more comfortable, obviously, that income is steady, even though we both know, I mean, a W-2 person could lose their job the same day we lose our job.
Yeah.
Our income might not be as predictable on a piece of paper, but gosh, that's always just
the way I look at it is I have, at any given time, I probably have 10 jobs, right? 10 listings or pieces of business. I'm looking to add 5 more, and I might, not sell 2 of them. Whereas my friend that has a W-2 job, he's got 1 job, and if he was to be fired, that'd be pretty catastrophic, and he wouldn't have any prospects. So I'm not the bank, but and there's different brokers that don't have robust as a pipeline, but for folks like you and I, which it's hard to underwrite that, I think our income, because of how active we are, is actually more consistent than someone that may have a
I'd
paycheck.
agree. I'd agree. Go make that pitch to the bank though, right?
Maybe a credit union.
There you go. All right, let's see. What is okay, so of everything that you've invested in, what's probably one of the biggest mistakes you think you've made along the way?
Oh, that's a good question.
Or maybe a deal that didn't go quite like you thought it would and what went wrong.
Yeah. Well, a quick recap on a few things. Early mistakes made were, one, I just thought the inspection, like the physical inspection, was the most important part.
Mm.
Like if we get that right, everything else falls into place. And then you get through that and you have to get financing, and it's actually quite a bit more difficult than you think. And then you get through that, and you got to get investors, and that's difficult too. So it's like it's shifted from, like, I've found if it's a great opportunity, it's going to be a lot easier to raise the money. The inspection should go relatively well, and the debt usually is the biggest driving factor, at least 2/3 of most of the things we purchase. So really knowing the financing was a mistake early on. I just thought the debt would show up, and we had a deal mutual during the pandemic, or right before the pandemic. We're non-contingent, just certain we're getting a loan. A few factors happened in Seattle, specifically West Seattle, and banks, not just one, but multiple, just like,
Mm.
no, thank you. So that cost us some money and was a tough lesson to learn. That financing component is huge, and it's not a guarantee.
Yeah, and I don't think, especially for young brokers out there, or call it, inexperienced investors, you don't necessarily have to be a financing wizard to make any of these transactions or deals happen, but you have to have a basic understanding, you have to have relationships, and if you don't have either of those, you have to surround yourself with other partners that do. Because to your point, if you find the right deal, it seems like you can find the money. But finding the debt and working with the banks and timing everything up, knowing exactly how long it's going to take, what you need to provide those lenders to actually get approvals. I mean, it's a little more comprehensive than you think. I mean, you remember this from probably when you bought your first house. I mean, I had to laugh when I bought mine, and almost painful to admit, but I'd been already doing brokerage business for a while, and I'm going to get my loan with the bank, and they're asking me to fill out a personal balance sheet and like a P&L. And I'm looking at, and I'm like, I run my own business, but I've never actually thought about a P&L and a balance sheet for my life. I mean, I know all
Yeah,
those numbers, and it was a wake up call for me that I had a harder time than I should have filling out my own P&L to buy
yeah,
my own house.
yeah,
So it's just good on the back end to kind of educate yourself and get a little more familiar with what that process looks like, so that by the time you're ready to do, your next investment, you're a little more fluid. And
yeah.
that's what that taught me.
I'll give a plug for brokerage too, mortgage brokerage specifically. The first few deals I didn't work with a broker, so I had what I thought was a pretty good, uh, universe of options, but it was tiny. So when the pandemic hit and those three options failed, we didn't have any time to replace them. Ended up having to, walk away from some earnest money.
Mm,
I think if I had a broker, one, they would have been anticipating that some of these banks would just outright say no because of what's changed. They'd also be on the phone and talking to dozens of the right lenders that were active at that moment. So
yep.
since then, we've done several of our deals with Crux, Jake Wilson at Crux, and I think they're a team that has access to the big national groups, but especially in this like mid-market space where I spend a lot of time, is constantly refilling who has what we'll call hot money
Yep.
to lend on deals.
Yeah. Yeah, I mean, it's the same reason you hire you brokers for your basic transactions, why you hire a guy to fly the plane that's taking you across the country, you hire a doctor to do your surgery. I mean, if you're not a professional in it, pay a professional. It's worth it.
Yeah,
And you would agree with me. I mean, even though hiring a broker costs money, that the amount of it's just like my CPA. I mean, I pay him every year, and the amount he finds a tax savings that I would have never found myself, paid for his fee 10 times over. I mean,
totally.
it's pretty simple when you come down to
I'm
it.
I'm curious, flipping it back to you on the investing front. So I have done some LP, so limited partner investing in industrial deals,
Hmm.
where there's someone else running the day-to-day, purchasing the transaction, taking the risk, and I give them money and pay them a fee to do so. I'm guessing some of your investments have been industrial. where I've been really interested to be in your shoes, like, do you feel like you have an upper hand because you're buying a vacant building that you know as a broker you're going to be able to fill, or is that not the case?
The simple answer is yes. If you look at, so I've invested in, is it four? I think four industrial deals now, two of which were direct buys where I had one partner, just the two of us. And then one of which, actually two of which were basically I was an LP in as well. And the two that I bought directly myself, both were vacant at the time of purchase. I knew through my brokerage activities and knowledge of the market that a lot of my upside would be achieved on the new tenant, the new lease. I put some TIs into both buildings, tenant improvements for those that don't know, basically to justify getting a higher rent. And so
Mm.
then you factor it all in, the returns that I got were great, about what I expected or more. But I think a lot of that comes down to a lot of people get scared of vacancy. And I'll be the first to admit, I mean, the one deal that I did when I did my basic underwriting, I thought we'd have a tenant in 3, maybe 6 months at most. It took us 12.
Mm.
And I had squatters move into my property twice in that
Ooh.
12-month portion too. So there were added costs there. TIs were a little bit more expensive than I thought they'd be. So here I am, what I call the bona fide expert on this kind of stuff. And even I underestimated just generally how it goes. But that's kind of the nature of, as you know, commercial real estate in general. I mean, you can be the expert and plan and forecast as much as you want, but they just don't always go according to plan. It's kind of the nature of the business.
But I feel you have, as you mentioned, they don't go according to plan. Like every deal we've bought that we've repositioned, whether it's from a value add perspective or changed operations, I've thought I was being conservative, but they're like, okay, I think it should take 3 months, so we'll make it 6. It's really 12,
Yeah.
or I think it'll take a year. It's probably 2 to 3. So just being realistic there is a big lesson. But I think you guys add so much value when you're purchasing a property that you can tenant, because for us, it's like, yeah, how am I going to fill a 54 unit building any different than anyone else? Right? We
Yeah,
can
it's
market it
true.
well, but I don't have like residential tenants in my back pockets. I think it's a huge advantage of some commercial brokers that are investing because they're working with some of the best tenants. So buying vacant buildings you feel is an opportunity. As for me, it scares the crap out of me.
Yeah, no, to your point, I've never thought about it that way, but like I think about when I bought those two deals I was just mentioning, basically the first thing I did was send the vacancy out to my entire network of tenants, right? Because I have that. Then I'm calling all the brokers, my competitors, but my friends, and going, "Hey, I have this available listing, and FYI, I'm the owner. So if your tenant wants a deal, they're going to get one from somebody who is in the business of deal making day in and
Yeah.
day out, right? And
Yeah.
so that definitely that added a different flavor to it than to your point. I mean, you guys obviously hire management companies, and you have to rely and trust on your management company, trust on what's going on in the market, hope
Yep.
that people want your product. I mean, a lot of it is really out of your control. To your point.
Yeah. Yeah.
Interesting. Okay. Here's a question for you. So, if I'm a young broker just getting started in my career, as you know, in those first few years, the income is scarce, but usually you can figure out a way to kind of start ramping up. And if I know my end goal is investing, what would be some advice you'd give to a young broker on how to kind of manage their income, start looking at deals? I mean, what if you could go over and do it again? What would you do differently maybe to maybe jumpstart your investing career a little bit quicker?
Yeah. I mean, it sounds silly maybe to some, but my first like real apartment, when I say real apartment, it wasn't like sharing some place with friends, it was like quality apartment I was like proud of. I had negotiated, it was a condominium with the owner, lease to buy. And when my year came up to buy it, I was like, it just feels like a waste of my time. I'll go rent somewhere else again. And so I think even starting out, maybe just buy somewhere to live. I got that advice from a client. I thought I'd knocked the deal out of the park. I was in my third year of brokerage, went to his office. He had a ton of other buildings he was going to sell. I was like, hey, how do you not hire me? Right? Like I just turned what you thought was an $18 million deal into a $20 million deal. Let's do more. He said, "Do you own your car?" And I was like, "Well, the bank has the title, but yeah, close." And he's like, "Okay, but do you own a home?" And I was like, "No." And he's like, "And you want me to hire you to sell $50 million piece of real estate?" He's like, "Go buy any real estate and you'll understand where I'm at. You'll have more empathy for me." So I'd say just get something. And if entry point for you is just a condominium in the city, I think it's huge just to have some bills and have to pay utilities and have, what it feels like to own your own place. And then step two, if you make enough to skip step one, step two, I had a lot of success doing that first, triplex that we converted and added some space to. I was amazed at how much, and I lived in one unit, so there's only two residents other than myself, managing their lease, their renewal, their maintenance and repair issues, how much time, effort that took, and then just like throwing a pro forma down on paper and then executing on it was so much different. So I gained a ton of empathy for owners then and just realized like, man, this is a lot harder than it looks. When I sit down and look at a closing statement, like, oh my gosh, I can see how much this person just made. A lot of timing and luck and skill and hard work went into that. So I would keep it really simple and do something close to home. What I wouldn't do, Spokane, it's 4 or 5 hours from here. I got more scale, for what I could have bought probably a duplex in Seattle. I bought 12 units in Spokane. It's a freaking long ways to get there. There were issues. I didn't feel like I had enough time to solve them. So I'd rather have less units close to home where I can like wrap my arms around an issue and solve it.
Yeah. Yeah, I mean, it's the class you just described. The classic example is that the whole world, especially like the social media world, who loves to glorify real estate investing and passive income, passive investments, and we both know it's anything but passive. I mean, you can usually get a property to a point of stabilization where the attention and time requirement is about as minimal as it would be, but it's anything but passive, especially when you work in the type of properties that we do that have tenants, right? Because tenants are tenants and they're never going to, generally speaking, they're never going to be there forever. So whether you like it or not, something's going to change. That tenant's going to leave. You're going to need to replace them. What does that look like? How much time does it take and how much money does it cost? So it's not as easy as people think.
I guess another idea going full circle, what do you want out of investing? Do you want the passive income? Do you want to really understand how a property operates? Do you want to physically upgrade it yourself? Like, what do you want? Because what I learned from a few brokers, like you can do limited partner investing. So now, because of how my brokerage career has grown and what I've learned from doing the investments myself, I'm actually more apt to be a limited partner in a deal because I can focus more on what I'm really good at, which is brokerage. Like I've had a flavor of each value. I haven't done development, but everything else. And I'm like, yeah, the perfect opportunity shows up. I could grab a few partners and buy it. Great. But if it's just making sure my money's working in real estate, I'm probably going to give it to a couple clients I've seen beat the market and let them run with it. Because although I'm paying a fee, it's just like with brokerage. You're paying a professional. It's got a business, 30, 40 years track record built around investing. I'll probably do better with them. I've learned a lot of lessons, so I don't regret the investing I've done, but there's still more to learn. And I think just figure out, do you want to be an investor long-term? Do you want to be a broker long-term? What are you leveraging the investing for? Are you getting better at investing or you just want to cover your cash flow?
Yeah, that's a really good way to put it, because I think naturally as brokers, we're inclined and wired to try to control the deal, right? And case in point, you've done several of your own. I remember the first two LP deals I did, I felt like I had no control. And to a certain degree, you really don't. But if you trust the thesis, you trust the investor, look at what the underlying thing you're investing in, and if you believe in it, then usually the leap of faith ends up panning out better than you think. I mean, there's obviously external market factors that can impact that thesis and everything that's you're going forward that you didn't anticipate. But in my experience, it's actually, to your point, it's always worked out and usually better than the market. I mean, it's what I could have achieved myself or better with significantly less time invested and time, energy, commitment. I mean, it's kind of set it and forget it, which is kind of nice. And a lot of times the barrier to entry is significantly lower. I put significantly more dollars into the two deals that I controlled than the two that I was an LP in. So
yeah,
there you go.
For sure. What about for you? I mean, my biggest concern early in my career, and this could be a personal thing, my biggest concern was competing with the clients. How have you addressed that?
Great question, and I get it often. So I think about it in two ways, and you already touched on one of them, is that when you own real estate, any type of real estate, but especially if you own real estate, that the same kind of real estate that your clients own, you automatically become a better broker because now you're in their shoes, you're managing it. You're not just leasing their property, you're leasing your own property, you're managing your own property, you're putting money into your own property. You're directly participating in the same activities that a lot of your clients are. I just had this question the other day, and it is a client who wants to buy very similar properties than I do. But I think what we sat there and we had the conversation, and what we both came to the conclusion on is that while we're generally kind of looking for the same thing, there's so many criteria that you look for in investment: cash flow. Am I betting on appreciation? What's the location? What's the functionality? How much money do I need to invest in the deal, whether it's through upfront down payment and financing? Do I want to set up some kind of syndication? And when you start adding all those up, there might be some overlaps, but I've generally never been in a situation where my client and I have all the same performance metrics, right? And the reality is, a lot of our clients, as we do well as brokers, but I would argue that most of my clients have a higher net worth than I do. So the investing that I'm doing is usually at a scale much smaller than a lot of my clients are doing anyway. So my clients are like, well, why, how do I know you're not going to send me or take that deal before you send it to me? Well, I can't afford that deal, if I'm being honest with you. I mean, that's a big one, right?
Yeah.
And so it's never been a conflict because I think every deal that I've participated in, I could look through my client base and like maybe there were a couple out of there that would have been interested in that deal too, but it didn't really, neither of the ones that I bought directly were like, oh, this is tailor made for Jerrid, and I've come across several of those that I've looked at it where it would have been tailor made for you. And I thought, well, it's perfect for Jerrid and I like it too. And I think, and maybe it's just the way that I operate, but I thought, you know what? I mean, I just sat here and the first instinct I had was that it was perfect for Jerrid. Let's see if Jerrid wants it. And maybe if he doesn't, then it's a sign that it's maybe a deal for me too. I've come across a lot of those that felt great deals for my client. And I think ethically the right thing to do is present it to the client first and let them, decide if they like it or not, at which point then you get a bite at the apple if it's something that you're interested in too.
Yeah. I agree with you. It's a difficult challenge. I think ethically I follow exactly where you're at as well. So as far as deals we've purchased, there was only one that was in the market I actually represent clients in, and it was a deal we listed, and we had offers come in and they weren't where the seller wanted to be, and they said we would sell at this price. We went back to the best buyers. No one showed up, and I said, do you mind if we buy it for that price? I see some opportunity here. So I was the only one. The rest have just been brought to me by other brokers. I'm just like, hey, if you want to bring me a deal, I don't bring buyers into other brokers' listings. So I figured if they're calling me, great. They probably called everyone else too, and we found some opportunities, mostly out of market. But I have a story on exactly the point you mentioned. It was a really tough one. We pursued a deal several years ago, sent an offer to off market, didn't hear much from the seller, and then 3 years go by and they called. Is this offer still good? We're having a really tough time. Called the client and he's like, I've kind of swam upstream since that offer. I was like, I would love to pursue this. Go for it. That was it, right? Gave him the first bite. He said he's swam upstream. It was too small at the time. Great. So that's where I think it's helpful. But I build a relationship with the brokers and the empathy we have, the skill we're developing as brokers from owning these deals is bar none. It's great.
Yeah, totally. And the clients appreciate it. I mean, you already told the story of the guy who didn't want to work with you until you owned something. I mean, I have a client I can think of specifically that when I walked him through what I've done in my career, I mean, the expression on his face and just the general level of comfort that he then expressed of like, wow, I know you get it and I can trust you. And it's like, yeah, we're in the same shoes. So, all right. I think maybe in the interest of wrapping this up, I'll hit you with one last one. And that's kind of, what are you thinking the next couple years are going to look like for your kind of personal investing? What are you looking for? What are you targeting? How are you going to try to beat your competitors, beat the market, and really be successful in getting more deals?
Yeah, I'd say candidly, actually have done most of the money I've made through brokerage has gone back into investing. So actually looking a little bit more into our personal life and getting that little more secure. So just paying down debt and being really judicious with the way we spend our money, letting some of these investments mature. So I'd say like position A for the next couple of years is actually just go make money and pay down debt. Go make money, pay down debt. And position B, as I've somewhat mentioned, is strategically partnering with clients that I think do it really well. Like if you want to do a value add apartment, for example, and there's 40 units and you're going to come in and increase rents and renovate them all, like that is not where I'm strong. But I have some clients that have in-house contracting, in-house management. And so going to them candidly and like, hey, if I find your perfect deal, instead of paying me, X, we do need to take a fee. We work at Kidder Mathews, but can I also invest my own money in that deal? Yeah, let's do that. So I think that's my strength and my opportunity. If I'm where I add the most value is finding opportunities and selling them for a lot of money. It's find opportunities, make sure I invest in them, and when I sell, I'm also helping myself.
Yeah.
So as far as actual product type, I think the biggest miss right now is buildings that are operating still with what I call the COVID hangover. And the easy thing to do is look at someone's P&L and say, it's been 4 years. Something's wrong with the property, and actually being able to like, nope, it's the operator. Like really, they have never figured it out. They weren't good operators before things got difficult, and they're much worse since then. And believing through what 4 years of poor trailing financials says, understanding the real estate and saying, hey, this is a great basis. We can still pay whatever this low cap rate is because we're going to do it much better and we're going to do it quickly.
Yeah, I think cap rate's probably the biggest myth in investing, right? I mean,
Yeah.
I'm much more focused on basis. What am I paying for the physical real estate, and then what am I underwriting to, forecast forward? And if it takes me some time to get there, and I got to put in some money or do whatever I got to do, I mean, that is truly. You think of value add, and it's like you think of paint and carpet, and all these other things that are very transparent value add. But I mean, the real value add is repositioning, improving management. That's where it's at.
Yeah, for sure.
Good deal. All right. Well, I'll let you go. Appreciate the time as always. We'll do this again sometime soon, but thank you. And to anyone watching, I'll include our contact information. You can reach out to Jerrid or I. We're always an open book and happy to discuss this further. Thanks, Jerrid.